Welcome back, friends, to another weekly video. This week, I'm going to be talking about the massive corporate bailout going on in America right now. Now, this information actually came out a few weeks ago, and I've been holding off on doing this video because, honestly, I was so shocked and so angry that I wanted to allow some time in case there needed to be some corrections made or there was some action taken or somebody came forward, but there has been nothing. And so I'm making this video today to lay out for all of you all of the numbers. And I'm gonna leave links to my sources in the description box down below so you can check the details out for yourself. Let me start with a statement that some of you might find shocking. The current recession we're in is not the result of the pandemic. It is caused by massive amounts of corporate debt. At the end of the 2019 calendar year, corporate debt in America had reached enormous levels. Corporations had almost $10 trillion in debt, which is roughly half the GDP in America. More than 50% of this debt is known as highly risky junk bonds. That is significant because junk bonds were only 17.5% of the market in 2001. This is important because what typically happens during a recession is that junk bonds all default because corporations receive less revenue and can't make their debt payments. This situation was like a barrel of dynamite ready to explode. And everybody knew about this. People in the financial world have been talking about this for years. Last November, the Federal Reserve released their financial stability report and stated, balance sheet leverage of businesses is near its highest level over the past 2 decades. All businesses across the United States in all sectors were doing this. They all had too much debt. Now, it's important to understand what caused all this debt. The Federal Reserve has kept interest rates really low for the last decade. This created a banking environment of easy credit that businesses have been taking advantage of. This chart shows the Fed funds rate going back to the 1950s. You can see a typical pattern of a recession occurring, followed by a decrease in lending rates to spur economic growth. Then over time, the rate increases until the next recession. Only since the last recession, rates have remained very low. Corporations have used this environment to increase their debt. So what is it that companies are doing with all of this money? Companies are funding corporate stock buyback programs. Here is a chart from Bloomberg showing the impact of corporate buyback programs on the S&P 500. What you see is that companies buying back their own stock is a huge driver of demand in the stock market. Goldman Sachs released a statement in November that corporate buyback programs was the dominant source of stock market demand. Just to emphasize this point, here is the S&P 500 market performance over the same period of time. You can see the huge increase in stock prices driven by corporate buyback programs. So here is the game that corporations have been playing. Increase the amount of cheap debt, use the money to fund stock buyback programs, and increase the company's stock price. Companies are carrying too much debt. And this is not debt that they're using to build factories or do research and development or create new jobs. This is debt they're using to adjust their capital structure and increase their stock price. And there's nothing wrong with that except that it's very risky, because if the economy goes into a recession, there is a very good chance these companies can't make their debt payments. What makes this problem so bad is that it cuts across the entire US economy. Everybody has been doing this. In fact, companies have been incentivized to act this way because if a company doesn't increase their debt, then they're going to be outperformed by their competition. Then the pandemic hit, and the recession started, and the credit markets froze up. And this drove the Federal Reserve to take unprecedented action and start massive lending programs. But we have to stop and talk about why the credit markets froze up. The credit markets froze up for a very good reason, because everybody had too much debt, and the banks all understood that it was too risky to keep lending during a recession. What would normally happen in this situation is that companies would deleverage their balance sheets and adjust their capital structures accordingly. But instead of us holding companies accountable, we bailed them out. Now, a lot of people blame the Federal Reserve for this. I don't. And I know I'm going to get a lot of angry comments for saying this, but the good people at the Federal Reserve are just doing their job. They're looking around and seeing the economy about to fall apart, and they're trying to do what they can to help. From their perspective, it's not going to do anybody any good if the entire economy falls apart all at the same time. So they're trying to buy us some time. Who I do blame in this situation is the corporations, because they know better. They know they have crummy balance sheets, and instead of fixing it, they're looking to the government for a bailout. So a few weeks ago, the Federal Reserve started releasing information on who has been given special government loans due to the credit markets freezing up. The names on this list are shocking. I pulled the data from the report to Congress that was uploaded on Friday, July 10th, 2020. There are 332 companies on this list with direct loans from the Federal Reserve. These are some of the biggest corporations in the world. I have pulled out 8 names at random here just to give you an idea with the dollar amounts of the loans in millions of dollars. AT&T, $26.3 million. Apple, $25.5 million. Microsoft, $19.2 million. Berkshire Hathaway, $17.6 million. Disney, $14.8 million. Walmart, $10.8 million. Starbucks, $7.4 million. And Amazon at $4 million. I find this shocking. 332 of the largest companies in the world with government loans, when the problem is they all have too much debt. Do you know what happens when a poor American has too much debt and they lose a bunch of income? They downsize to a smaller house. They stop using one of their credit cards. What you don't do is you don't take out more debt. This is a massive bailout because at some point, poor Americans are going to have to pay for this down the road with higher taxes. Now, I do think that the Federal Reserve did the right thing here by keeping the economy from collapsing, but their actions assume a second step. It assumes that corporations do the right thing and deleverage their balance sheets. These companies do not need this debt. Microsoft does not need $19 million of government debt. Berkshire Hathaway does not need $17 million of government debt. These companies need to restructure and give the money back. Now let me show you something that is really going to make you mad. Now I have expanded this table and I have pulled the cash balances from each company's last annual financial report. Now this does not include investments, it doesn't include receivables. This is cold hard cash that is just sitting in the bank. Now each one of these companies could have funded these loans with their own cash. The most shocking of these is Amazon, who has $32 billion in cash just sitting in the bank. They do not need to take a $4 million government loan. This was a money grab. All of these companies made a conscious decision to take a cheap government loan when they did not need it. Shame on you, Amazon, and shame on all of these companies. Shame on you, Berkshire Hathaway. Shame on you, Microsoft. Shame on you, Walmart. You don't need this money. Give the money back. Now, do you want to see something that's going to make you even more mad? The Federal Reserve has increased their balance sheet by $3 trillion. Now, the stimulus checks that went out to every American was authorized up to $300 billion. So if we look at this chart, it shows the difference of stimulus money that went out to ordinary Americans versus stimulus that went to other places. Direct loans to companies is only a part of this. The Federal Reserve is also buying mortgage-backed securities, they're buying ETFs, all to prop up financial markets. This money is not going to ordinary Americans. How is our current situation not considered graft? Now, graft is political corruption that results in someone's personal gain. The US government should not be funding loans to corporations so they can prop up their stock price. These companies know better, and they need to give the money back. And I don't understand how they can take this money when they know that there's so many poor Americans who are starving in this country today. When you're a company, you have so many different options. Starving Americans don't have any options. There was a famous movie made in 1939 called Mr. Smith Goes to Washington. And this was a movie about the problem of graft. And in this movie, the main character says, "I wouldn't give you 2 cents for all your fancy rules if behind them they didn't have a little bit of plain, ordinary, everyday kindness and a little looking out for the other fella too." There's a lot of truth in these words. This is a really simple situation. There is too much debt. And these companies took this money when they didn't need it. Shame on you. Give the money back.